It was established to deal with the long-term capital challenges facing the financial industry, as well as go a long way to address the high interest rate regime in the country. Well, wondering what institution that I'm talking about is Development Bank Ghana. But since 2022, have they been able to deal with this long-term financing challenge and also it dovetailing into the interest rate challenge? Well, let's say that I might be a little bit privileged or most privileged to engage the Chief Executive of Development Bank Ghana, Mr. Kwame Duka. I hope I got the name right. Thank you so much for your time. But honestly, it has been quite a while. And I would say that what has Mr. Duka been up and doing?
No, thank you. Thank you, George, and thank you for the time. I think the Development Bank Ghana was set up in late 2021. We got our license. We made our first loan within 9 months. And from there, we've been building on in terms of some of the issues that you're describing. We can go through the details later as we discuss. But I think the most important thing, and I would say the most important achievement, is that we were built at a time of skepticism regarding development banks. The history of development banks in this country and Africa has not been stellar. And I think what we've achieved over the last 2.5 years is really a realization about the importance of our work. The role that we play in terms of providing long-term financing, local currency, and our role as a catalyst and as a stress partner. And we'll go into some details about what that really means. But I think in that respect, I'm really humbled by the hard work of not just the staff here, but in particular the individuals, and I always think in terms of individuals, the individuals who set up the operation and the prescient vision of our president in terms of the need of a development bank. And I think we're beginning to realize that promise.
So look, some would say and would want to look back again, as you mentioned, about the history of development banks in the country. And they are the skeptics and those who are worried about, okay, what will be the fate of this development bank too going forward?
So it's actually a really tough question, right? Because you're correct that the score for development banks is probably in this country and elsewhere is about 4-0, right? And there are a lot of reasons for that. But I'll be honest with you and say that the role of a development bank, and it's important we go into detail, the role of a development bank depends on being financially sustainable. And the reason that's important that you're financially sustainable is that you cannot long-term depend on replenishment, right? So we have to be clear that development banks that were set up, that post-takeover funds, didn't have that automatic replenishment like you have with AFDB, like you have with World Bank, like you have with KFW, right? That business model in itself is difficult to be sustainable. And so I'm not going to go into, mismanagement and all the issues that, to be fair, they're valid, but you got to look at the core business model. And we'll spend some time talking about that because it's important. Yeah.
But do you think that with respect to our past learnings from what development banks have done over the years, we have put in place all the required structures to insulate this development bank from those challenges, because those shadows from the past would definitely be a concern about for a lot of people who are watching the market and say that 10 years, 20 years from now, 30 years from now, we still have the Development Bank Ghana?
I think we will. And that's what we're working towards, to build something that is financially sustainable, and so that we can one day, maybe I'll get invited to
celebrate the anniversary.
20th year anniversary and 30th year anniversary like other banks. But let's take a step back, right, and say, what have we done to ensure that we have that longevity? And I'll start with a fundamental point. And again, I keep on emphasizing it's about being financially sustainable. And what that means in many ways is that a development bank always walks that tightrope between impact and being financially sustainable. And impact costs money. Making a difference costs money. So you always have to have that balance. And that balance can only be done in concert and in collaboration with your shareholders and your stakeholders. So we built this bank right from day one with a focus on being financially sustainable. And that's our primary objective, over and above everything. It's not a 50-50 for us. We set up in place to have a governance structure that is world-class and best practice. And that was enshrined not just by me, but by the government and by development partners. And the covenants and the rules and the regulations and the contracts that we have all reinforce that governance. And so that it was put in place. The board was put in place by competitive recruitment, and so was the management. We were set up deliberately through the Development Finance Act, not directly as it was in the previous cases, by an act of parliament or by the decree of government. We were set up through a Development Finance Act, a legislative instrument. We applied through Register General as a company, and then we had to work to earn the license, which took time. Bank of Ghana ensured that they dotted the I's, crossed the T's. But that discipline was important in setting the right tone. And for that, I thank government, and for that, I also thank the individuals who set this up. And to them, great kudos. And that process has actually continued. So our current, as you know, individuals change in government, but the focus that we received, I think, is because of the way in which it was set up. And the current Minister for Finance, huge supporter in terms of what we're doing. But the point that I'm making is that it goes beyond individuals. And that is important.
And so for some, the shock absorbers have been put in place, the right structures have been put in place to deal with these fears that anybody might hold about the future. 50 years from now, this institution will still be standing and strong and playing its rightful role when it comes to development finance in the country.
I'll be disappointed if that's not the case. But you must also remember that as you put in place all the shock absorbers, as you put it, and that's a very good term, and making sure the protections are in place to do that, you also have to look at the basic business model. And it's important that people understand the basic business model. Now, the business model that we have is built on two themes. The first theme is that exogenous or external to the development bank, right? We have a situation in this country where riskier assets, you get less return for riskier assets than less risky assets. So what do I mean by that? You look at government T-bills, 24%. But you look at the loans that we make, they're at 17%. So that in itself is turning around the conventional wisdom that the more risky your asset is, the greater the yield. So that means that it's not a problem, but it means that everybody needs to understand the environment that we're working in. And that environment means that as long as you have that disconnect between risky assets and less risky assets, that means that we provide concessionary funds. It's not a lot of concessionary funds, but But the implicit from that is that we will then need replenishment from our development partners. And so part of my job is to make sure that our development partners and our shareholders understand that the business model we have today requires periodic replenishment. Now the future is different. The future is important. But while we have this external situation, periodic replenishment is important for us to continue the work we do.
That is very critical. I'll be coming back deep into the whole interest rates issue, the lending and the risky assets and all those things. But again, quick backtrack again to the module as well. We know the classical economic theories and all the rest about the whole concept about development banking. Does that same apply to Development Bank Ghana in terms of the module and the business module? Or because I see a bit about SME financing and I ask myself that, okay, what is Development Bank Ghana doing in SME financing? But help me appreciate quickly the module and the structure for the Ghana business going forward for the bank.
So why would we be any different? Why would we be isolated from the normal disciplines of market and interest rates? We are not. But let me just take one quick step and try and answer the questions. So we were set up with a capital structure of close to $900 million. And in a sense, that's a lot of money, particularly for long-term financing. But if you look at the overall deficit, that's just a drop in the ocean. So essentially, we are a catalyst. And our main role is to change behavior and is to help the whole banking sector. And we work with them as partners, but to help the whole banking sector reduce the risk of lending to local businesses. So let us be clear. Right? Even though we're a wholesale bank and we lend to the banking sector, and not just the universal banks. I lend to the SNLs, I lend to the rural and community banks. Even though that's my primary role in that respect, the end goal by which we are measured is how much money gets to the end borrower, i.e. the local business, i.e. the SMEs. So I'm totally invested in fostering the growth of a competitive private sector. But I can't do that alone. So as a wholesale bank, I must work with the CBGs, the Fidelities, the ABSAs, the EcoBank. And together we're beginning to build an ecosystem that allows us to leverage our funds, amplify our funds, and begin to make a big difference.
Let me come to the long-term financing issue that is very, very critical. That is one of your primary focus about long-term financing. And the challenge in this country about long-term financing has always been a big issue for a lot of players in the industry. Are you living by that tenet or that focus as in providing long-term funding to these institutions, universal banks, for them to on-lend? Because that is a real challenge for a lot of these commercial banks out there in terms of getting access to long-term financing.
Yes, it is, right. That is our goal, and that is what we're doing step by step, right. But these questions are complex because they are what I call wicked problems, right. And wicked is actually a technical term. That means that you can never solve this by one solution. You have to look at different areas to resolve that issue. So prior to Development Bank coming in, I think less than 5% of loans were 5 years or less. We're beginning to change that paradigm. But it's not just by going in, to excuse my French, going in booga booga, right? It's going in and ensuring that we are making sure that we are working with bankable deals. Because profit is not a bad word. Sustainable financing is only if people are making consistent profits, especially my banks. So I have to make sure that it's not just putting in money for money's sake. We also have to make sure that we are working only with bankable deals. And there are not that many, but they're increasing all the time as we go in and we try and insist on changing behavior. So now our loans that we have are on average about 8 years. We can go up to 15, and we keep on pushing that envelope for particular sectors.
I mean, this is quite interesting. Even though I'd gone through your financials, I hadn't had time to do those detailed scrutiny. You're doing a minimum of 5 years up to 15 years?
It's not a minimum. On average.
On average.
On average, the loans that we have out at the moment are around 7 to 8 years, right? We can go up to 15.
Are you doing 15?
We haven't done any 15 as yet, but I hope to, right? Because you have to push that envelope. And you have to remember that if you're going towards 15 years, what are you talking about? You're talking about CapEx. You're talking about capital growth in terms of building infrastructure. And in our economy, many of those things that are required in farming, in manufacturing, etc., for that length of time tend to be dollar-based. And so there's still a mismatch there in terms of ensuring that our local financing can also be used for bringing in these long-term CapEx that we really need for growth. But we're working on that. We're changing our products. We're bringing in new products in that respect, and we hope to be able to make a difference.
It will come to my question about what is stopping Development Bank Ghana from doing a 20-year loan, a 15-year loan, despite the FX issue that you've raised. What is the main hindrance for you in doing the up to 20 years loan or even 30 years loan? You've been in operation for a while now. Somebody, you say that you appreciate the market better than anybody, and you know the good clients and then the bad clients and all the rest. What is the major stumbling block now from achieving that aim of you've been doing about a 30-year
It's interesting. I love the way you said it, right? You said, despite the FX, it's just about the FX. It's purely about the FX, right? And again, these are just facts, right? Okay. Nobody here who was born after 1960 has seen an appreciating cedi. So it's just about the FX. But we are continuing to push that envelope, supported by the Minister of Finance, supported by the Bank of Ghana, and we'll push, as you said, our average has now gone from 5 to 7 to 8. By the end of the year, we'll be pushing it to 10. But we have to make sure that we're providing bankable deals. Because if you don't provide bankable deals, you will end up not just the way of other development banks, that's not it, but you will not convince others to invest. Our role as a catalyst means that my success comes when I'm crowded out of any particular sector because the banks are doing so well that I'm not needed. That's how we measure success. But to be able to encourage the banks to come into that sector, we need to de-risk the environment. We need to be a catalyst. We need to show that it's possible. And we've done that. We've done that with rubber. Now, development banking is not needed in the rubber industry because we made the early loans. We took the first risk, working together with Gersel, who's a very close partner. We put together bankable deals, and now we're not needed. That is success. We're doing the same thing for rice, primary agriculture. That's a key sector for us. We started investing in the Afram Plains through CBG, through EcoBank, etc. And they begin to build a nucleus. And after a while, if we're successful, we will not be needed.
I'll be coming back a lot more to the agri financing because I also understand you're doing something in that space. This is PM Express Business Edition. Also look at the long-term capital challenge in this country and the high interest rate and the role that Development Bank Ghana is playing since establishment. What are some of the challenges and how are they making some critical progress in that area? We'll be right back after this break. Welcome back to PM Express Business Edition as we look at the long-term financing challenge facing this economy and that critical role that Development Bank Ghana is supposed to play, and also the interest rate challenges. Speaking to the Chief Executive of Development Bank Ghana, Mr. Kwame Duka. Mr. Duka, again, the bit about the long-term financing thing is very critical for me and dear to my heart. But it appears that as long as these FX challenges persist, we may not be able to cross the 20 or 30-year financing, because it appears that that is a huge challenge. Is it because your source of long-term financing is also more of dollar denominated, or what is the challenge here?
You're correct. All our financing is dollar denominated or euro. We have EIB loans through the government. So they are in hard currency in that respect. And we have to, working together with the Ministry of Finance, we have to pay those loans back, albeit concessionary loans, right? So that is a factor. Let's not move away from that. But it's not going to stop us. And the reason it's not going to stop us is that even though foreign exchange plays a huge part of this, the other part of it is the risk premium that is applied to our local businesses, which can be something like 700 or 800 basis points. And for some of the SNLs, it can be much larger. And so those need to come down. And so as we work together with our PFIs, partner financial institutions, we are bringing down the component of the interest rates that is due to the risk premium. And we're doing that by de-risking. We have set up a subsidiary called Development Bank Guarantee, which works very similar to Gersel. And that basically provides credit guarantees to the banks to allow them to be able to invest more safely at the beginning, whilst they take the first risk. So we're trying to de-risk the different sectors we work in. And if we can do that successfully, we can bring interest rates down, but maybe 500, 700, 800 basis points. But when you do that, it has a knock-on effect, because a thriving economy does what? It very simply reduces the need for foreign exchange. What we're doing in agriculture today, I can go through some of the numbers and tell you what that's doing in terms of FX, providing alternative sources that we don't need to use FX for, etc. Bringing in valuable foreign exchange also in that respect. So as you get, it all starts with profitability, which the euphemism is sustainable finance. Once you get a private sector that is working, is thriving, is competitive, and is making money, the foreign exchange issues will, by definition, come down.
The bit where you spoke about the interest rate issues and it coming out, I'll be coming back to it, but the de-risking bit about the sectors, one area that is also very important has to do with agriculture. And what are you doing in this way? Because when you engage a lot of these commercial banks out there, their biggest challenge is about the risky nature of that sector. What have you done with your partner institutions as you work to de-risk the sectors? And one area that a lot of de-risking is needed so much is the agricultural sector.
Okay, so agriculture is the most important sector. It's not one of the sectors. It is the most important sector for everything that we do, both as a development bank and as a country. So we're doing several things, and I'm going to talk about 3 things that we do. Right? The first one I mentioned already, so I won't spend too much time on it. We're setting up the Development Bank Ghana Guarantee, which then allows our banking friends to be able to invest, knowing that 60–70% of that risk is being carried as insurance by that guarantee. And that's what Gersel's been doing in the agricultural sector. And we actually support Gersel prior to DBGG. So that's number one. And that's important in terms of what we're doing. The second thing that we're doing in terms of agric is we are supporting technical knowledge, making sure that all the deals are bankable. And because of our support for Gersel, and Gersel has done a great job, not just in terms of guarantees, but what they've done now is that virtually every bank in Ghana today, if they have an agricultural transaction, they will bring it to Gersel to vet about the bankability of that transaction. So now there's a focus and understanding and a deeper knowledge of setting up proper agricultural transactions. And for that, I thank Gersel and the MD, Kwesi Kobo, in my humble opinion, has done a fantastic job.
You think that your workings has played a role in dealing with this? Or
we're a catalyst. We're a catalyst, right? So we change behavior, we help, we provide funding, etc. But let me tell you the third area, which has nothing to do with us, right? And don't waste a good crisis. What does that mean? So over the last 18 months, the CD has depreciated by 150%. What you have seen as a result of that are two things. You've seen a huge move into agriculture because of the value of the CD. You see an increase now when you go to the shops of locally produced rice, because now it's more competitive than it was before. And so these are things that we need to take advantage of now. And this is not just academic stuff. We're financing 2-3 big farms at the moment on the Afrin Plains. We're working together with Sinapi Abba. The MD is one of my favorite guys because he understands all these issues in the Yendi area and other things. And we're beginning to see that as a nation, we are far more competitive because of the forced devaluation. Yes, it was a crisis, but let's take advantage of it. And it's already happening.
And you think that this role or workings that you've done has gone a long way to de-risk a chunk of the sector? Because there are some who still think that there are a lot of areas out there that are crying for financing. These are
100%.
Projects that can deliver good returns to these banks and all the rest, but they are struggling because they are battling to deal with the challenge of the fact that, oh, it's agriculture. In the boardrooms and the fights that are going on, in the credit committees and the fights that are going on, and whether we should buy treasury bills or we should finance this agri project.
So now, I think that's changing, and that's changing thanks to the work the government has done. There is really, and we can go through some of the numbers, there is really a big push into agriculture now over the last 9 to 12 months.
Help me out with the numbers, and not being specific per se, but over the period since your establishment, what has been the total support, in roughly the round figures, not exact, that you have played a role in extending to this sector?
Okay, so let's give you the headline.
Right.
So the headline is that to date we've lent maybe 1.6 billion Ghana cedis, right? But that's important because what that means is that if we continue at this rate, by this time next year, we'll be the largest lender in the country. If you're the largest lender in the country, you have influence. You have influence on behavior, and you have influence in terms of changing mindsets to see agriculture. And this is really important, not as a risk area, but as a business. Part of that, I think, in terms of the total that we've lent, about a third of that is into agriculture. We have
that is out of the 1.6 total lending.
Exactly.
A third of that has gone to the agri sector.
Agri sector. The other areas are manufacturing, ICT, and high value like tourism. But our focus very much is agriculture. But let me just give you one real example and how we try and replicate that example throughout. We've always believed that the best way to support our smallholders, right, has been through the more mature farms or the more mature farmers in that respect. And why is that important? Because what do? When they till their large farms, they till for the community. When they bring in the seeds and the hybrid seeds and the higher yield seeds, they share it with the community. When they're harvesting, they do all that. They also act as off-takers for the smallholders, and all the post-harvest services, threshing, drying, etc., they provide very much pro bono services. But that provides a discipline and a support to the community, which is real, and we see that all the time. So I was in Yendi, and I just give this as one example. But this is what we try and do. So I was in Yendi a week ago to look at one of the farmers that our money through Sinapi Abba and others has gone to this farmer. And he plays several roles, some of which I just described. He's an aggregator in the sense that he buys from the smallholders. But he also supports them in terms of technical assistance, which is so important. And he helps them, as I said, with seeds, with yield, with better farming methods, etc., which has allowed the yield in that area to move from 1 bag for the smallholders to between 2 to 3 bags. In that respect, this one farmer has 5,000 smallholders who he acts as an off-taker. 3,000 of them are women. But the most important thing he said was, because of that increase in yield, because of that support he provides, the youth in that area now see farming not as a punishment, but as a business. Now, if we can do that and replicate that, not just in the Yendi area, but in the other areas, from the south to the north, Midwest, etc., then we would have succeeded. But working through banks or financial institutions like Sinapi Abba, but also working through aggregators who can make that difference.
Apart from the large scale financing, the long term thing, what else do you think can be done to try and de-risk the space so that a lot more banks will see the place as, I mean, the whole value chain, these entrepreneurs that are in that space and all the rest, the value addition, can see the place as more attractive because now institutions like yours have worked hard to de-risk the sector. What else can be done apart from the provision of long-term funding? What are some of the...
There are 2 areas.
Yeah.
The first one, I have to give credit to the Ministry of Finance and the initiative, which is the SME Go project, right, led by Honorable Amin. And that's fantastic because it brings the focus squarely to where it should be, right? It's not about anything else but supporting the private sector, supporting local businesses. And that focus, by which we are only one of the partners, is getting everybody to think about how we can support local business. So it's not just us anymore. It's GEA, it's Exim. Together, we are bringing our PFIs. So you're getting all the great and good in the banking sector now focusing solely on ensuring that that happens. That's one area. The second area about how we can do that is we have to get everybody speaking the same language. So what happens today? And let's be honest. Banks complain about SMEs, right? They don't pay their loans. They don't want to pay.
Somebody say that's the reality on the ground.
It is and it isn't, right? It is and it isn't. That's why I'm saying these things are complex, right? You can't ask a fisherman or a farmer, etc., to give you 20 pages of documents and a mortgage, right? Or title to his land that he's been living on for the last 100 years through its generations. But anyway, then you get the SMEs saying, when I go to the bank, they ask me 500 questions, even if I can get anybody. It goes on and on and on forever, and after 6 months, right, they send me an offer, and by that time it's too late.
Too late.
Okay. But if we think about it, doesn't the bank want to make money? Doesn't the SME, the local business, want to make money? So if we both want to make money, then we are united in our view. Banks only make money. We have to remember this. Banks only make money if their customers are making money. So we are totally aligned. But the problem is that we're speaking different languages. So one of the things that we're doing, and we've started about a year ago, is thanks to KfW and the World Bank, we're building the biggest, what we believe will be the biggest data center in terms of data for SMEs, banks, and also national databases. And we already have a lot of that in place. We have GRA, thank you very much. They've done a great job, DVLA, etc.
Mr. Dick, I always say that, why do you want to go into that space? Because
let me explain.
Yeah.
Let me explain. You see, you have to change the paradigm for development banks. Remember, we said traditional development banks only depend on replenishment. You have to think of the future. And how do we break that replenishment? Development banks have one superpower. We are a super convener. Banks talk to us because we provide liquidity. So banks give me all the data. SMEs, local businesses, give me all their data. Why? Because they want a loan. And government allows me access to all the data because they are my shareholder. As a super convener, I now have the real data between banks, SMEs, and government. And if we can build the data lake that we're building, and we can analyze it properly, then you can get common nomenclature, which means a common language, which means that we can have common underwriting terms. So when you go to bank A, bank B, bank C, you don't get a plethora of different documents because the data is the same. And then the SME knows clearly exactly what they have to do to get a loan. Because a lot of that risk premium is caused by the disconnects and the data asymmetry. And a lot of that work, again, I must say, is work that we are leveraging on. This is the work that's been done by Vice President in terms of bringing together all the different sources and all the different data. And people have to realize that this is money. This is de-risking the sector. Right? Take a quick example. Take Ghana Card. Do you realize how much Ghana Card has de-risked transactions? People don't get it. But today, and taking another example, my daughter in Tamale, if she's sick, I can send money to the hospital today. Can you realize that essentially is de-risking a transaction? When before I had to find an uncle who's going up north, etc., etc., all that kind of stuff.
Yeah.
Exactly. And you get ripped off, and guess what? The hospital doesn't get the money. So all these things are so important in terms of de-risking. Trust me, right? Digitization is the way forward, is the way to leapfrog all these traditional Spanish practices that have bedeviled, and I use the words carefully, bedeviled our industry. And if we can get that right, and again, we're only the catalyst. BOG has done some fantastic work already in this area. And of course, VIPA's done some great things here. If we can put it all together, that's our job.
Mr. Duke, I'll be coming to focus more on the interest rate, but about 500 basis points in terms of using the long-term capital? Some must say it's quite a Herculean challenge, looking at the environment as well. This is PM Express Business Edition as you engage the Chief Executive of the Development Bank Ghana on the long-term capital challenge facing the economy, and also how do we work to drive down interest rates or the high level of interest rate using the development bank tool in this country, Ghana. We'll take a short break and we will be right back. Welcome back to PM Express Business Edition as we engage the Chief Executive of Development Bank Ghana as we look at the long-term funding challenge that is facing a lot of institutions in this country and how Development Bank Ghana is working to bridge that gap, that area. Let's look at you talked about lending 1.6 billion in terms of the portfolio
to date. Yeah.
To date. What is the plan going forward in terms of the lending as well, and what's the portfolio, or what is the book, I can use the word, the loan book size going forward for Development Bank Ghana?
So I think that to be the largest lender, as I said, we'll probably have to be over 3 billion. And we'll do that by this time next year. But the goal, certainly until 2027, is to have lent between 5 to 6 billion in that respect. But I don't want us to focus on the actual amount. Right.
But some would say it is very critical if we know that
it's not.
You're going to advance this to the economy.
No, it's
that
not.
brings some excitement to people.
No, it's not. It's not. It's not. And we really need to step away from that. Right. If I lend that 5 to 6 billion in a stupid way, it would be even worse. It would be like giving out drugs, right, and creating a sense of dependency that can be continued. No, we can't focus on the amount. What we have to focus on is the impact those loans are doing. Are they changing behavior? Are they allowing me to bring in more banks in terms of the point that you keep on mentioning, which is absolutely valid? How do we de-risk and show the way? We are pathfinders. Yes, catalysts, but we are pathfinders. And sometimes we'll get it wrong, which is okay. That's our job. But by focusing on deals that are bankable, right, and working together with like-minded banks, we will make a difference to this country. And I must, at this time, give a shout out to the Bank of Ghana, who was instrumental also in the setup of the bank. And also, and it's important, also to the Ministry of Finance, right? Both in terms of the previous Ken and also Honorable Amin. Because the focus is consistent, and that's what's important. Right at the beginning you said, only you can do it, but you cannot do it alone. And when you have policy, regulator, and private sector, i.e. the banks, working together, we're going to win.
In terms of this loan book thing over the next 3 to 4 years, then you've given me a hint already, impact lending. What would be the focus areas for Development Bank Ghana in terms of this lending that you're looking at? Are we going to have any special sectors that you would try to use this lending to deal with that challenge? In terms of the focus areas, where are we going to look at here over the next 2 to 3 years? Yeah.
So regarding, in terms of the way we're set up, we have 4 focus areas, right? Of which agriculture is number 1, number 2, number 3. Below agriculture, we have manufacturing. Then we have ICT, which is a huge area. It's a growth area. We need to think carefully how we do that. And then we have one more area, which is high value, tourism, et cetera, et cetera. But within those 4, we must focus on SME Go. How do we get and support this initiative of SME Go? Because that's our mandate.
And agriculture as well?
Pardon?
Agriculture as well?
Agriculture?
And agriculture as well in terms of the sector funding.
Agriculture is 1, 2, and 3. It's my top
that means
3.
That means it will take a large chunk of your loan book if it's 1, 2, 3.
100%. 100%. Which country has ever succeeded without getting agriculture right. We've got to get that right first. In terms of food security, at the moment we have issues about irrigation, et cetera, we support all those things.
And you mentioned a very critical area about irrigation as well. What role are you playing in that space? Looking at what is even happening in the northern part of the country right now and the impact on food security as well. Is there an area that it could be said to be dear to your heart that you convince your shareholders and your boardroom as well that we need to look at this particular space because of its impact in some of our food baskets in Ghana when it comes to irrigation and all year round supply of water to these huge farms out there?
So again, you got to just change the narrative a little bit. So it's not me, because I'm not the expert, right? I'm just the banker. But all I want is to make sure I get my money back. And my PFIs, CalBank, CBG, EcoBank, Zenith, soon Stanbic, soon GCB, Fidelity, ABSA, EcoBank. And I'm sure I've forgotten somebody, so I'm going to get a call from one of my CEOs pretty soon. It's so important for them that we also build only on bankable deals. So now, take agriculture. If you were going to the Afram Plains as a mature farmer, and part of your plan is not how you get irrigation, then Gersel, who act as our technical experts, will turn it back. If you come and you don't have a way to be able to handle the energy situation in terms of your pumps and all that, etc., your threshers, etc., they will turn it back. So we're working not just in terms of irrigation, but also in terms of providing solar and helping them. But it's driven by the local business. I don't impose. They come in and say, this is what we need. And then we have to work out how we can make it happen in a way that's bankable. And what bankable means is that even though I may lend today at concessionary, the output must be commercial. So yes, we help, but I cannot help, and I will not help if your output is not commercial. Input, no problem.
You talked about bringing down lending or interest rate or influencing interest rate by some 500 basis points through your lending. Some would say that is quite ambitious, sir.
My ambassador, Tonkati, this is a serious job.
Yeah.
So of course it's hard. It's a battle, right? It's not easy. Remember, these are issues that we've had from government after government after government. If it was easy to resolve, it would have been done. So now, yes, it's difficult. Yes, it's ambitious. But would you want me to be unambitious?
Not at all.
Thank you.
Because the arguments also would also play, and that's it comes back to the bit about whether with all these good plans that you have, we should leave GDB alone or Development Bank Ghana to do it alone, because there are externalities that plays into the interest rate argument here.
100%.
Funding alone wouldn't be enough when 100%. You have FX, inflation, and the larger economy as well. If all these externalities are not working in your favor, it will be quite difficult to drop the rates by 500 basis points for me to walk into the bank and get some loan, or get some loan from maybe Neo Kynes Bank as well.
Well, let me tell you the trick, right? I didn't tell you how long it would take me, okay? So let's
maybe you tell us that.
Okay. But seriously, no. In terms of the way in which we're working with the Minister of Finance, the disciplined way in which he's leading the SME Go initiative, and the understanding of, these externalities. Because remember, not all the externalities are negative. Yes, currency depreciation,
inflation,
on one side can be seen as negative. On the other side, what does it do to our exports? So we have a hand that we've been dealt with, right? End of story. I am working with a hand I've been dealt with, and it's tough. No doubt about that. But I have two big things in my favor. There is a consensus among my seniors, my stakeholders, my government, that this is important and there's a focus, as evidenced by the minister's lead on SME Go. That's number one. If you have a consensus and people actually working together to the same goal, as Ghanaians, why will we not succeed? That's the number one. Number two, we have been set up mainly because of the skepticism I mentioned at the beginning, that our governance is annoying, it's frustrating, but it's necessary. We have put in place extremely strong governance so that people can trust that DBG, we're doing the right thing. It's so important because banking is what? It's a business of trust.
It's good you've not shared the target with me. Maybe in the next 5 years, you're looking at achieving that?
I'll do it in 5 years. I may not be around, but it's not relevant.
But the institution,
the bank will do
module
it.
has been built.
The bank will do it in 5 years. The bank will do it in 5 years. Why not? Everybody's working together. The support we get from our central bank, the support we get from our ministry is awesome. But it's not as if they're not aware of the challenges that you mentioned. But these are difficult challenges. Let's not pretend. If it was easy, Chair did that. No.
Let me bring in the non-performing loans issue and even bring in the attitudinal challenge as well, because it's a systemic problem where the banks will do all the necessary appraisals and scrutiny and everything, but still the NPLs are high. Some will blame it on the connection with the government paying these debts and all those things, but it's another big area that, have you looked at it, and is that a concern for you about the high default rate, which sometimes is not the doing of the commercial bank, it's not the doing of the credit committee, but sometimes there is a bit about the attitudinal thing where people just don't want to pay back the loan, and it feeds into the high interest rate challenge as well.
No,
is that a concern for you at the bank? As you working to deal with the challenge of the high interest rate regime?
And I'm glad you mentioned that, because as we said, these issues are complex, and to try and trivialize them or try and say there's one solution actually misses the point, and it's disingenuous. So we look at two things, and we're doing quite a lot of work on that. We're doing work on willingness to pay and ability to pay. And willingness to pay is a very big factor. And we're looking today with the central bank. We have a big study going on, and we have an actual project with the central bank and also the Monetary Authority of Singapore to look at the causes of and the drivers of willingness to pay. It's one of our big projects versus ability to pay. And so we're looking now at what we call trusted credentials. And these are, in many ways, looking at different factors to establish willingness to pay. So we're trying to move away from the traditional things that you look at. Because I've always believed is that you cannot make a loan based on collateral. That cannot be the reason. You can never make a loan based, when Chiamia, I can go and take his house. No, that's being lazy. Make the loan because it's a bankable deal. The collateral is only icing on the cake. So we're now looking at the moment, and there's been a lot of work going on, about 36 or 37 different indicators that help banks make the decision about willingness to pay. And we're running a sandbox or a pilot together with the central bank at the moment. Again, as a catalyst, we've put in 10 million Ghana cedis, and we're testing that pilot today to see whether we can actually come out with things that we can share with our PFIs about willingness to pay. So we're doing a lot of things. This is one of them. It's one of the more exciting things we're doing.
As we try and
Right.
wrap up on this discussion,
Yeah.
there's one question I've also been asking myself about when I saw on your areas of priority the SME financing, and I'm asking myself that what is Development Bank doing in SME finance? Because maybe your job is stopping at lending to the commercial banks and let them do the nitty-gritties. Why are you getting into that space of SME financing?
Okay, so let's understand this. SME financing is our space.
I see.
I do it via my PFIs because I want to leverage my impact. I want to cross-finance. I want to make sure that the money that I have, I can amplify it by working with the banks. And I can also help change behaviors. But let me tell you something. My development partners who give me money to on-lend to the PFIs, they do not count the money if it's still with my PFI. They only count the money that allows me to be replenished if the money has reached the SME. SME is my business.
I see.
SME go. I don't lend to my PFIs because that's where the story ends. My development partners will not give me a penny if that's where the money ends.
So some good news for those budding entrepreneurs with bankable projects?
Yes, but let me tell you something. I have to enforce the discipline, working together with my PFIs, and they want to do the same thing, that we only support bankable projects. That's one of the reasons why when we were set up, we were not allowed to go direct.
Yeah.
Because the credit risk is taken by my friends and family, my PFIs, from GCB all the way to Cal, to ABSA, to EcoBank, because they insist that the deal must be bankable. Because while it may take longer, while it may be more difficult, if we don't establish that this is what we support right from the get-go, then we're going down a road that none of us want to go down.
So Duke, as you wrap up, what would you tell those who would say that the success or the impact lending that you're looking forward to all boils down to the economy and the environment? That's in the corporate parlance, sometimes they'll tell you that it's all about the bottom line. Great plans, great outlook, great support, work in progress, and all the rest. But it boils down to the externalities as well. If they are not moving in the right direction, all these fine plans, Derisking agri sector, supporting SMEs, dealing with the interest rate challenge, it pulls everything back, and then the shadows of the past about development banking and all the rest come back to haunt us.
Of course it does. It's not an easy job in that respect, but I'm comforted by the fact that we are not doing it alone. That the Bank of Ghana is a big supporter. The Ministry of Finance, right, are such a big supporter in terms of helping us ensure that we're doing the right things, right? So it's tough. The externalities are all there. We know that. But that does not mean, and it cannot mean, that the externalities trump everything. There are businesses today that are doing well. I gave you 2 examples. We take those as our examples and we try and build more of those. Yes, because of the externalities, I can do 5 when I want to do 50. But there's no other way. I have to build the right businesses who can thrive, who can grow, and then they become the template for others. And again, I repeat, the success of the development bank in any sector is when we are not needed.
So, Duka, I appreciate your time. So, man, in 5 years from now, wherever you have been looking for it, because about the interest rate dropping by some 500 basis points, and whether it will happen or it'll still be a mirage for a lot of people out there. This has been PM Express Business Edition, engaging the Chief Executive of Development Bank, Kwame Duka, getting the thoughts about how to deal with the long-term financing challenge, and also the bit about the high interest rate regime and how we can get around it. This has been PM Express Business Edition, engaging the Chief Executive of Development Bank. And I hope that wherever you are, indeed, the debate will still go on and what is the best way in dealing with this high financing cost, long-term financing challenge issue in Ghana here today. My name is George Wiafe. Have a great day.